It's Clay Trader, and this will be a video chart on ticker symbol JNUG. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I've been doing this analysis on a very routine basis, so that's where these red and green lines are coming from. And certainly want to get things updated here, as we have quite a bit of confirmation from, really yesterday's video of levels that I've talked about. The big piece of confirmation is in regards to this green line here. I realize this will mean a little bit more to those of you that watched yesterday's video, but for those of you that did, sorry about that, had an issue with the annotation tool. But again, those of you that did, hopefully remember me talking about the green line value right here about $7.55, which you'd want to see act as support. I mean, you go back in the history, you can see it's acted as support before. And today, okay, it didn't quite hit it, but I think we can all agree it got well within the range of that level of support. And then it acted like you would want to see it act, and a nice bounce did indeed follow. Now, is there any sort of true strength behind this bounce? Well, that remains to be seen. But the point being, as it stands right now, we got further confirmation that there are still plenty of buyers sitting right down here around the $7.55 mark. And then you factor in our long-term moving average, which is that pink line right there, the 200 period, and you can see now it's kind of like a double whammy effect. They're both essentially valued for the same thing. Now remember, this is a moving average, so as tomorrow unfolds, that moving average is going to continue to well move, and it'll eventually cross up above it. So when it crosses up above it, at that point in time, the moving average takes higher priority over the 755 mark, because really from the big picture, you don't want to see the price falling below the pink line. But if it does fall below the pink line, then at least there's still 75. But a fall below the pink line and then a fall below and close below 755 at that point, that would be a pretty big sign of bearishness, on the bear's part. But as it stands right now, that has not happened. In regards to levels of resistance, not a whole lot here has changed, other than just kind of confirmation of, like I said, levels that I talked about yesterday. I did indeed talk about that purple line, acting as resistance, and you can see today early on, price got up in the region and then got rejected back down. So yes, $9 is definitely kind of the thorn in the side of the chart and that overall level of resistance. But before any discussion about $9, comes about doing battle with it or whatever, bulls first got to get back above that purple line there, the 50-period simple moving average. So this one continues to be volatile, but even with the volatility, it's not really that volatile, because when you just stop and think about it, it's essentially just been stuck in this channel for the past couple of weeks. So we'll see what direction either the bulls or bears finally decide to push it. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.